So, Amy, today we're going to be talking about the VA home loan guarantee. It's a great benefit that I've definitely used several times.
Yeah, it is a great benefit. I've used it myself. But there's a few things that listeners should be aware of, especially as they approach military retirement.
Welcome to Operation Retirement Readiness, where Amy and Mike, two certified financial planners, talk about how military members can prepare for transition and how veterans can prepare for ultimate retirement.
This podcast represents the views of the hosts and any guest. It is for informational purposes only and should not be considered tax, financial, or legal advice. All information is regarded to be from reliable sources. The hosts are not responsible for any losses, damages, or liabilities that may arise from the use of this podcast. This podcast is not intended to replace professional advice.
All right. As we both said, VA loan guarantee is a great benefit. It's a fantastic resource for both, military members while they're serving and veterans after they've completed their service. So we're going to talk about how do you apply for the benefits, what they entail, and some common misconceptions. So, Amy, can you just basically describe what the VA home loan guarantee benefit is?
Yeah, great question. So, the VA Home Loan Benefit is a program offered by the Department of Veterans Affairs to help veterans, active duty service members, and some eligible surviving spouses become homeowners. So it provides a range of benefits, including probably what is the most commonly known: no down payment, a little bit better interest rates usually, and no private mortgage insurance, also called PMI, which makes things a lot cheaper.
Uh, Sounds like a great deal. How do you get eligibility for it?
Yeah, so eligibility is based on your service history and your duty status. So veterans, active duty service members, National Guard, and reservists all may be eligible. And then again, certain surviving spouses of veterans may also qualify. So Mike, if somebody qualifies, how do they integrate this into their home buying process?
Yeah, so the first step is to apply with the VA. You need something called the Certificate of Eligibility. So there's numerous ways you can do that. You can go on the VA website, pretty easy process. They walk you through it. You can also apply via mail, or lots of times your lender can also help you do that as part of the process. So once you get that application, you get your certificate of eligibility from the VA. You go now and work with a VA lender, and they're gonna know the whole process and have specific expertise in that. But some of the things that this is now more in the regular part of home buying, they're gonna want to see your income statement. They're going to want to understand your proof of service and your credit history to come up with, hey, this is how much we're going to be able to lend you as part of having this VA guarantee. And we'll talk more about the qualifications in a little bit, but can you talk a little bit about how much you can borrow?
Yeah. So there used to be a specific limit to how much you could borrow using a VA loan, but it's different now. So if you don't have an outstanding VA loan, meaning you've never had a loan or you had one and it's paid off, VA will basically reimburse the lender for 25% of the loan amount if you default. So basically 25% of whatever amount of loan you take out is sort of guaranteed by the VA, which is why the rates can be a little cheaper and there's not PMI and things like that. Now, if you do have an outstanding loan that hasn't been paid off, you can still possibly get a VA loan. It's tied to the conforming loan limit in the county where you're buying. For those situations, it's really better to talk to a VA lender. They're going to have a lot more expertise in this area. They're going to be able to walk you through your particular situation and let you know how much you can use for your VA loan.
Yeah, that definitely sounds smart. Because yeah, the math and stuff can get kind of tricky on how you figure that out. So, yeah, and again, while there isn't really that cap on how much you can borrow, or it's the straight 25% of the loan, you still got to qualify for that loan. And if you're making $100,000, lenders probably aren't going to loan you, $2 million for that dream house that you have. So again, I think we've hit on some of them, but what are the real advantages that come with the VA loan?
Yeah, I mean, I think probably the biggest advantage, and I know what makes home purchasing accessible for a lot of service members or veterans is the fact that there's no down payment. So that's a big hurdle that people without access to a VA loan have to get over. So it ends up being a big barrier for home buyers. Also, like we mentioned before, VA loans usually come with a little bit better interest rate, partly because some of that loan is guaranteed, so the lender doesn't have quite as much risk on the table. And then lastly, so PMI is something that civilians would have to purchase if they aren't able to come up with that 20% down payment. Since the VA is guaranteeing 25% of the loan, then the lender doesn't require a PMI, which it saves a ton of money. So between interest rates being a tiny bit lower or a little bit lower and not needing PMI, it is a huge savings for military families. Mike, now we've talked about savings. Now there is a cost to it, right? So can you talk about the VA funding fee?
Sure. Yeah, you get all those benefits, but the VA, there is a fee each time you apply. So VA funding fee, it's basically a one-time payment that helps them lower the cost of having the program and all of that. So these fees can be rolled right into the mortgage, or you can pay them off at closing. So if it's the first time you're using it, and again, these are going to be based on how much of a down payment you're going to make. As Amy said, you don't have to put anything down. But for the first use, if you put down less than 5% of the price of the property, you're going to pay 2.15%. If you put down 5% or more, up to between 5 and 10%, it's 1.5%. And then if you put down more than 10%, it's 1.25%. So again, a little bit lower. So great for the first time. After the first use, the rates change, at least for if you're putting down less than 5%, and it jumps to 3.3%. So I know I definitely, recommend to clients, if we're talking about this, that, try to have at least that 5% if it's a second use, because, it drops from 3.3 back down to that 1.5% if you put 5% or more down. So again, you want to factor this in. It's still a good deal, but, just understanding that. And then, Amy, there are some times where this can get waived, where you don't even pay the VA funding fee. Can you talk a little bit about who might qualify for that?
Absolutely. Yeah. So you don't have to pay the VA funding fee if you're receiving VA compensation for a service-connected disability. If you're eligible to receive VA compensation for a service-connected disability, but you're receiving retirement or active duty pay instead. So for those who are under 50% and are getting a retirement pay, for example, you're eligible to receive the compensation, but you might not be getting it. If you're receiving dependency and indemnity compensation as a surviving spouse, then the VA funding fee can also be waived. This is big for those who are about to retire. If you're a service member who has a proposed or memorandum rating before your loan closing date, that says you're eligible to get compensation because of a pre-discharge claim, you also don't have to pay the VA funding fee. So that's big for retirement planning purposes. And then lastly, if you're a service member on active duty, who before or on the loan closing date, you provide evidence that you have a Purple Heart, you also won't have to pay the VA funding fee.
Yeah, so great overview. And, the approaching retirement piece is, understanding that most of the time you don't get your rating until after you're fully retired. That happened with me. had to pay the funding fee, because I was closing while on terminal leave versus, after my official retirement date versus if I had waited, a couple more months to buy the house, would have then been able to waive the retirement fee. And that happens even if you put in your paperwork and use my dates for example. I retired the 31st of October, so if I had closed on the house November 5th, had the paperwork in, and VA came back with a rating November 15th, but I closed on the house November 5th, you can go back and get a refund from VA for that. But again, you've got to, your date for starting VA pay has to go back, disability pay has to go back to, pre closing on the house. So does that make sense? Did I explain that well enough?
Yeah, I think so. I think that covers it. So basically, in conclusion, as long as you were eligible for compensation, so in your case, you were eligible, you just didn't get the notification until after. So you had to go back and request, or you could have gone back to request a refund.
Well, and I couldn't because the date that my VA, the VA pay started on 1 November, the year I retired. I closed on the house in August.
Right.
So yeah, I had my paperwork in, but I had to pay the funding fee, didn't get reimbursed. If the house closing had been after that, after 1 November, then I could go back and ask for a refund if it didn't line up with when that came through. So just understand that. And one of the things with SkillBridge now, people are moving while they're still doing terminal leave and that type of thing, unless you've got like a medical retirement type thing where you do get that letter ahead of time that says, yeah, we're going to rate you as this. You're probably not going to get your VA rating pay until you actually go fully retired. So that can be one thing that you're probably going to have to pay the fee if you're moving on terminal leave type thing.
Yeah, gotcha. Okay. Some other, another challenge really that you have as you consider transition and home purchase. One of the biggest challenges is demonstrating stable and ongoing income. So, usually a lender is going to want to know that, if you're retiring, you already have a job offer, you know how much you're going to make. And we've talked about this before, transition is a big period of uncertainty. So it's really important to make sure that you have documentation of what your retirement benefit's going to be, as well as any other sources of income that you may have or that are going to continue.
Yeah, I find that's, trips people up. Sometimes they're surprised that this is happening as they're getting ready to retire. Had friends that, trying to buy a house in the DC area, but they're going to do SkillBridge. So they're going to have, and they want to do it in that time frame. And, houses in DC aren't cheap. So, having just, if all the income you can show is your retirement income, it's going to be a challenge to get approved without, like you said, that letter from a new employer saying, yes, we're going to cover, this is how much they're going to get paid once they start with us. But again, with SkillBridge, that can sometimes be a longer, process before you're actually going to get that letter.
Yeah, it's a big trade-off, trying to close on your house while you still have your military income, versus trying to get the VA funding fee rating. So definitely a point of consideration if purchasing a home is part of your retirement plans. Mike, I think one of the things that we should cover, because I know it could possibly start coming up more and more often, is VA home loan refinancing. So I'm betting you probably get the notices in the mail just like the rest of us.
Definitely, probably at least one a week in the mail, and then probably another, something from my lender via email saying, "Hey, you could be eligible to take money out," or other things. So, what's going on there?
Yeah. So there's two types of refinancing available for a VA loan. So if you have a low interest rate, probably, just like I do. We were lucky enough to buy when home rates were really low. Um, so they're offering the cash out refinance option. So they're offering you the ability to take out a new loan for more money, and then they give you cash back to be able, to use for home improvements or debt consolidation, things like that. So essentially, your home value may have increased, but at a minimum, you've been making payments. So they're going to use the equity in your home to cash things out. Does that make sense?
It does. It does. Yeah. The other type of refinance that this is a newer one is the interest rate reduction loan, IRRL. And this is known as streamlined refinance. Basically, you're going to stay with the same lender, but if you borrowed it, recently at the 7%, and hopefully in a couple of years we drop down, we're back in, 4 or 5%. You can go to your lender and just, they call it, again, streamlined refinance. You're just going to, pay some fees, but it's going to drop your overall interest payments, from when you borrowed down to what the current rates are.
Yeah. And I mean, it's important to understand. So there are fees and there is an additional VA funding fee. So, like we talked about, is 2.15% for the first time you use VA cash out, 3.3% for subsequent uses. And then the IRRRL, the streamlined version, there's another 0.5% in addition to any closing cost for that one.
Yeah, like I said, if you bought a home recently using a VA loan, the interest rates were high, 7, 8%. So again, hopefully more people are going to be able to take advantage of at least the streamlined refinancing in the future. Hopefully, I know rates have been slowly ticking down over the last couple, weeks even, and it may make sense to look into that at some point, in the future, if rates continue to drop and you had to lock in at a higher rate.
Yeah, one thing I'll add on the refinancing part of it is just making sure that you completely understand that there is a cost associated with it. So choosing the timing of that refinance is important. So lenders are looking very hard right now to get people to refinance. They're looking for business, and it might not be the ideal time for you to refinance because interest rates could go lower. We don't know. So if you refinance now, you're going to pay a fee. And then if rates go lower and you want to refinance again, you're going to pay another fee. So just keeping in mind that there's like the sweet spot of waiting for the right time, but maybe not waiting beyond the right time. And it's a lot of guesswork since none of us can know the future. Anything else on the refinance, Mike, that we didn't hit?
No, I think that pretty much covers it. Um, Anything else overall we need to touch on with VA
Yeah.
loans?
Yeah. So I think one important point, it doesn't come up very often, but I do think that it's an important element of VA loans, and that's that they're assumable. And so what that means is if you're selling your house, you could let a borrower just take over your home at that current interest rate. And for some people who bought their houses when interest rates were really low, that could make your house a lot more attractive to purchase. There's some challenges around this, and you really need to understand the pros and cons of the situation. But for the right situation, it could be a good deal for you and for the borrower.
Yeah, that's a great point. It's not especially common in other types of commercial loans that you might get. But yeah, if you can find the right borrower that maybe has a large down payment and can come in and that would be a huge deal in mine. I mean, I'm locked in at a 2.25% mortgage. Again, challenges as you get further and further along and eat more down into principal. The buyer's got to bring another bigger chunk of money to pay it all off. But again, if they could get some type of second mortgage or something, it still could make sense. So as you're thinking about selling your house with a VA loan that's locked in, talk to your realtor, see how you can kind of advertise that this would be a possibility. The one piece that we'll say is, if you're thinking of using your benefit again because you're going to buy somewhere else, make sure you understand how much entitlement that you could still get in that new place. So again, homework to do, but it is a kind of little known or probably little used piece of the VA loan. So
Yeah, that's great. Great considerations. Anything else that we need to cover, Mike?
no, I think we pretty much hit the main things of again, a great benefit that definitely encourage you to understand all the ins and outs because it can make home buying quite a bit easier than if you didn't have this benefit. So
Awesome. Well, I think that hits everything. It was great to talk to you, Mike.
yeah, you too. Take care.
Take care.
To get transcripts, show notes, or more information, go to operationretirementreadiness.com. Have a question or topic for the podcast? Send it to info@operationretirementreadiness.com. Find out more about Amy and Mike at their websites. Mike is the founder of Next Mission Financial Planning, LLC. He retired from the U.S. Air Force and has worked in the financial services sector since 2021. He is a certified financial planner, chartered financial consultant, and a certified college financial consultant. You can find out more about Mike at nextmissionfinancialplanning.com. Amy is the founder of Instar Financial Planning, LLC. She is retired from the U.S. Army and has worked in the financial services sector since 2019. She's a certified financial planner, a chartered federal employee benefits counselor, and a chartered retirement planning counselor. You can find out more about Amy at instarfp.com.